Should you rent or should you buy? This is such a loaded question, and it really depends on many different factors. But today we're going to go over some of the practical things and then kind of some of the technical things like cost and how that's going to look over time. And then some stories about people who have been screwed over by renting, but also screwed over by buying. And so just some things that you can think about to help you make your decision on whether you should rent or buy a house in Colorado Springs. So there's two things that you really have to think about when you are considering rent versus buy. Are going to be in a stable situation for many years. You know, before you could stay in a house for just a few years and then sell it and still make money. These days, that is not the case because the accelerated pace at which a home value increased was incredibly fast. And maintaining those values is a big question, if that's going to hold their value or go down. Now, I am a huge advocate for home ownership, so I will usually maybe not most cases, but in a lot of cases, I will say own a home because it's always been beneficial for me, but it's not beneficial for everybody. But home ownership does provide a stability, whereas renting, not so much. And so it really depends on whether you want to buy a house, if you want to build wealth over time through investment properties. And what I've done in the past, I bought a property and then I ended up renting it out, and then I bought a bigger house as my family began to grow, and I rented out that other property and I made some decent money. But owning property is a big deal, and it's something that you do have to take seriously. And even though some professionals and experts are predicting that the housing prices are continue to go up, that doesn't mean it's going to, or that is not a guarantee that that's going to be the case. But what I will say is that I'm noticing that housing prices aren't coming down a ton, enough to warrant let's wait for a crash and see how many homes are going to go on discount or on sale. And people are thinking, 100K, 50K, I'm not seeing that. And people are saying, well, if you wait for the Airbnb housing crash, a bunch of those homes are going to go in the market and those are going to be for sale because people aren't vacationing as much. And so that's going to be a crash there. And that might be the case in some other cities and states. But in Colorado Springs, there's really only less than 1,800 vacation properties. And I pulled that from a website called All the Rooms, where it shows all of the vacation properties and you can pull up what they're making. They are down 23% as far as occupancy, but again, it's the fall and I'm sure there's going to be some sort of dip naturally in the fall anyway, and maybe it's more, maybe it's less, maybe it's the same. I mean, I would doubt that it's the same because I would imagine that people can't afford to go on vacations as much as they used to. But my point is, even if the market were to absorb, say half of those Airbnbs went under and were forced to sell and the sellers had to move on from that hope of having a vacation property, that's going to be absorbed into the market pretty quickly. We're bouncing around 2,200 listings a month, which is only a 2-month supply of housing. So if that 1,800, even if every single one of them went under and had to sell their properties, even if that happened, that would not give us still enough months of inventory. And those homes are probably going to go pretty quick because I bet you they're staged real nice and they look real pretty. Those are probably going to get scooped up by people that can't afford the house and can't afford to buy. And they're going to take advantage of the market. What I will say is that a lot of deals are when no one's buying. If people are buying, then there's not going to be as many incentives or deals or negotiations because obviously people want to they're not going to hand out deals when there's no reason to. Right now, for example, in the new construction market, there's a lot of incentives. I mean, you're talking $60,000 for permanent fixed rates throughout the life of the loan. People are getting 4.25, 4.5 to buy new construction homes in the area. So when you look at it from that perspective, if people are giving out deals like that, then not enough people are buying. If more people are buying, they're not going to give out as many deals. So I know that real estate agents are always saying, now is the best time to buy. It's always a great time to buy. And I believe that to a certain extent because you can build equity over time. the sooner you start, the better off you are. If you can afford it and you're good with your finances and you meet all the criteria. Last year was a really great time to buy as well because interest rates were like 3%. So yeah, that was a good time to buy as well, even though it wasn't, as far as multiple offer situations and the competition and all that. That was not so great about it, but because of the interest rate, it was still a great time to buy or refinance. And the reason why it would be a good time to buy now is because you get those incentives. My buyers, we went under contract on a new construction home at just over 4%. I get a rate update, and a lot of rates are well over 7%. And I know there's a million different factors that go into that, so you'll have to, figure that out. Almost 8% I'm hearing from other people. And so to get a 4 or 4.25, obviously you have to qualify and be approved, but these builders are giving out appliances like washer and dryer. Never have I heard of a builder that gives out washer and dryer. I can barely get a fridge sometimes for new construction when the market is hot and everyone's buying, because why? They don't have to give out fridges and washers and dryers if people are just coming in on a daily basis buying property. So if you understand what I mean, the deals are here now. They're available now. If, like today, the feds did not budge on rates. It's pretty much going to stay the same. It's holding for now, which is good news, but it's also, it's still high. This is not an environment where buyers are willing to buy. But there's different things like buying down the rate. Lenders are offering to buy down rates. They're also giving out vouchers so that if the rate goes down again, you can refi for free or at no cost to the buyer. Sellers are willing to pitch in to buy down rates or pay for closing costs. Oh, that's another thing, that new build, 5-star new build. 5-star rating. They're also paying for closing costs. The earnest money is like $2,500. And this is for VA. So, but there are other lenders that are doing something similar, just not as steep of a deal, but still a really great deal for a new construction home. So if you've ever been on the market for that, now would be the time, because they're doing all kinds of crazy stuff to get people to buy, because they have a lot of homes that they've built that they need to sell off now. So first I'll tell you a story about a friend who got a killer deal on her rent. She's paying about $1,600 a month on rent. Beautiful house, plenty of space. It's a house, so they've got rooms for their kids. They've got, a nice kitchen. It's a really cute house. But for them to buy something like that, it would probably cost them about $3,000 or more per month with these interest rates. And so in that case, I don't know that I would want to spend that twice as much money to buy a house, even if the rates are reasonable. But if you're already paying $2,200 a month, maybe you might want to spend $800 a month in addition too, so that your money is going towards your house, not your landlord's house. And if it's somewhere that you want to live for a very long time, then that's something that you might think about or consider. Because every payment that you make is an expense. It's not going towards your assets or building your wealth or anything like that. It's going towards someone else's. So that's like my main thing. I would not want to expense my housing like that when I have the option to buy and it's not that much more. Before it was a lot cheaper to buy than it was to rent. So anyway, people are paying more to buy now than ever. Another story that is for buying is I had someone reach out to me and they said that they've been paying their rent. They've been living in this house for a very long time, and they've got a notice on the door, or I can't remember how it came to be. They were given a 30-day notice because the owner's house was foreclosing. And so they had 30 days to move out. So if you think that renting is more secure because maybe if something were to happen, then you're not on the hook for that mortgage. But where are you going to go? Rents have increased so much and you think you have a good deal on a rental, and then something like that happens and you have to move out, and now you're paying the premium rental price versus a mortgage price that was locked in years ago. Another tenant had a really good deal on what she was paying for rent per month, and then the BAH went up, and so the landlord decided to raise the rent because they knew that the BAH went up, and so they charged them that difference. So that was on the news. I saw that on the news. I thought that was pretty crazy how a landlord, I'm not saying all of them are bad, but if you get stuck in a situation like that, you're not in control of your housing unless you're here temporarily and it doesn't matter. You know, you can figure it out for a couple months, or, you know, get short-term rental or whatever it is that you can do and figure out within a short period of time. But for people that have lived here for many years and that's their kids' home, they had their babies in this house, that's hard to tell your kids, like, yep, we're leaving. And then you're probably going to be paying even more for rent, because when they move out, or when you move out, they're going to be able to charge a higher price, or the landlord wants their family member to move back home because they're struggling because housing is so high. And then they decided to let their kids or their family member or someone else stay in that house and ask you to leave. I've been seeing that a lot too. And also landlords that want to get their fair market pricing for their monthly rent. So what used to be $1,000, $1,200 for rent is they're either asking you to leave or pay the new $1,800 to $2,000 a month for rent. And that's a huge hit. So, but on the other side, our taxes did go up, increasing property values, like up to 40% in some areas, but also the insurance went up because now you have more house to insure, whereas before it was a $300K house you were insuring, and now it's a $450,000 house you're insuring. In 2025, when they reevaluate, it's not going to go up as much as it would in times past, because in a normal market it wouldn't spike like that. In a normal market it's just a gradual increase. So we're going to hop over to my computer and go over the technical stuff, the math, and what makes more sense for you. But in the practical side of it, are you going to live there for a long time? Are you going to want that stability in your life? Can you afford the little bit more payment? You have to be able to afford that payment comfortably. Because if something happens, something breaks, or, you know, something happens, anything. You know, if you follow Dave Ramsey's 3-month plan, 6-month plan, if you have enough money to ride that out, then you might be a good candidate. I think with all the uncertainty right now, it's just really hard to make that decision. And so I feel your frustration. I feel my client's frustration. It's definitely a lot harder to buy a house right now, but there are some creative ways that you can get into a house. That way you can start building equity. The nice thing about the new construction is that everything's brand new. So if something happens, the warranty will either cover it, or it's going to be a while before something breaks. The nice thing about an existing home is that you can either, like I said, buy down the rate or renegotiate some of the terms, like pricing or closing costs and things like that. And a recent study came out saying that over 30% of people buying in this market are first-time home buyers. So that actually made me happy, because last year that was so hard to do. Last year we were getting constantly beat out by other offers, cash offers. We were going 40, 60 grand over the list price with appraisal gap guarantees, and it just wasn't happening. People were going for those conventional loans or those cash offers, and very few VA, FHA, or first-time buyers were able to get in. So anyway, that's a really cool statistic. Let's talk about delinquencies real quick, and foreclosures. Our recent foreclosure hasn't really changed a whole lot, almost pretty much stayed the same. So if you're waiting for foreclosures, still historically low, even on a national level. According to Black Knight, it is historically low still. So we're not going to be able to look to foreclosures, Airbnb crashes, or some wild and crazy event to get more inventory out there, because that's the issue, is just not enough homes for sale. So if you're thinking that there's a wave of foreclosures coming, that it may or may not happen. You never know, right? Something crazy and weird could happen, like the black swan event, like we had been talking about earlier in previous videos. But at the current pace, that's what they're saying. People are predicting that prices are going to stabilize or go even higher as the lack of inventory, until that issue gets addressed, where sellers want to sell their houses and move up. Because right now sellers can't sell their houses to move up. They would be doing a lateral move because of interest rates. So they would sell their house to get a house that looks just like the one that they have, It's not going to happen. So we're in a weird place with housing. I do have a mortgage calculator on my website, liveinthesprings.homes/mortgage-calculator. You can use that to kind of figure out what your monthly payment might be depending on the interest rate. If you need help with that, feel free to reach out. But let's go over to the computer and take a look at some technical things as far as the math goes and what makes sense for all you math people. So the first thing you're going to do is go to livingthesprings.homes/mortgage-calculator. And we're going to figure out the breakdown of the monthly payments. So let's just say in Colorado Springs, there is a median home price of $480. And I'm pretty sure that's what it is because I just did a market update. And your down payment, it depends on the loan that you have, right? So maybe let's just say we're going to do a 5% down payment. And the length of the loan is 30 years. And the interest rate is, let's just say it's 6.5. I know there's rumors going around saying that it's like over 8. I have lenders that are closing out at under 7 consistently. And then one-time expenses, let's calculate about 3% of that. And then if you add extra payments, you can do that. If you want to pay bi-weekly, you can mess around with that and see where that leads you. But we're going to go over here, and some areas are going to have higher taxes than other areas. Some areas are going to have higher homeowner insurance. But so this is just a general calculation for those items. And private mortgage insurance, some lenders are not charging private mortgage insurance, so that could actually be 0. And let's see what that takes you back down to. That knocks off a good couple $100. If there's no HOA, if there is, you're going to put that number in. So you're just going to look at the properties to see which ones have that. And you can go to the home page to look for homes there. So $3,500 for your estimated monthly payment. Homeowner insurance is calculated. All of that is already in here. And this is on a $480,000 home. So now I'm going to go to the rentals. So $3,500 for the median home price. Remember, that was like a 3-bedroom, 2-bathroom home, generally speaking. So now I'm going to go to rentals.com so that I can see what I can find in a certain area for that price. So 80918 is kind of just like right in the middle of the Springs. So we're just going to do 3 bedrooms, and we're going to hit at least a 2 baths. And we're going to do single family so that we can kind of compare similarly as possible. C2 properties. That is really not that much, but look, you can see that the rent here in this area in 80918 is just under $2,000 a month. And let's just scroll through the pictures. I mean, it's a decent house. So now we're going to go, so that's $2,000 a month. Now that's a difference of $1,500 a month. That's a huge swing when you're looking at changing your monthly payment. So I'm going to just type in 80918, 3 bedrooms, 2 bathrooms, and we're just going to do single family homes. Here's one for 440, 487. Let's try this one. I don't know about these photos. But this is basically what I do, and what I show my clients how to do is like go through and see, you know, you're going to have to compare, like this property tax is only $1,300 compared to some with no HOA. So that's going to bring your monthly payment down a lot because you won't have all that. And then you can also negotiate with the seller. If the house has been on the market, you know, like this is 19 days, they might be a little bit more flexible with the price. I don't know. You won't know until you actually ask, but it looks like they listed 3 weeks ago and already dropped the price after 2 weeks. So yeah, so a couple things to look at to see how motivated a seller might be, price drops, things like that. So then I like to go to the New York Times. So keeping that in mind, that you're going to be paying at least $1,000 more a month if you're not renting. But also if you are renting, that $2,000, like that one that we saw on rentals.com, that's going to be None of it is going to be going towards your own equity or your own property. So that's all just going to be an expense. So like food, gas, housing. Whereas if you were paying $3,500 a month or more into your own property, and as you make more payments down the line, then that can be more beneficial and cheaper for you in the long run. So it is harder. It is a lot more to come up with. Years ago, you used to be able to have a $2,000 mortgage, and that worked out better. But now, times have changed. It's a lot harder. So serious consideration when it comes to buying versus renting. This link is going to be in the description. Think about how long you're going to be in the house. A lot of people are retiring here in the Springs. Maybe you did a service out here or duty out here and you loved it, and now you want to come back home. Then, or whatever your situation is, we're going to look at the median home price, which is $480-ish. And you could also type it in here. I think that house was $487. But let's just do $480. Now, you've thought about how many years you want to stay there. Some people want to stay forever. Maybe they are going to stay for the whole 30 years. So then this number up here is going to change. If you can rent a similar home for less than this price, then you should rent. Renting is better. But say like you only want to stay for 10 years. You might want to downsize or whatever your plans are, move to another country. If you can rent a similar home for less than $1,500, then renting is better. Or you also have to look at the mortgage rate, which this is way low. So that's going to change the numbers a lot. Also your down payment, if you're only putting down 5%, and then you'll just want to go through all these numbers and update. You can go back to the mortgage calculator to find out what property tax rate we were using on the mortgage calculator. This sounds about right for the area. That house I think was closer to $1,300, so you can, play with this and adjust it. And it gives you that magic number. So although it's hitting you hard up front to buy versus rent, over the length of the loan, for the life of the loan, it's going to be better for you financially. As long as you can be responsible with your money and make sure that you are budgeting for those things accordingly, then that's going to be a benefit for you. But also some tips on buying a house in the Springs. You want to buy something that's not going to be a money pit right away. It might look like a good deal up front, but then when you go on the back end and you see that it needs a new water heater or a new furnace or a new roof or the AC, that's going to be a lot. You want to look at the fence. So expensive things, making sure that there's no roots growing into the pipes. So making sure that you get your inspections done. And radon is another thing that you want to keep an eye out on if there is a radon system. If that system is working and the radon is under the EPA guideline. So a lot of this stuff you can look up online. You can look up the permits online to see how old, plan accordingly. Either you do really want the house and you're just going to hold off until that appliance or whatever does crap out and then you can buy a new one. Or, you're thinking this house is just way too old. Too many things could go wrong in the future and you want to be able to plan accordingly for that, if it's going to be too expensive or not. So there's a lot of different factors that come in when it comes to this calculator. But if you're smart with the strategy around it, then buying it might be better for you. But also you want to think about where you're going to be in 20 years. Are you going to be able to rent? Are you going to be able to live comfortably with the rent that you have in 20 years? And those are some things you want to think about.